Right. I think we are live on Facebook. Yay. And I don't see, I don't, oh, okay, now I see Mr. Gurdon. Okay, awesome, awesome, awesome. Just want to, we're at 7 o'clock straight up. So just want to welcome everyone. Welcome, welcome, welcome. My name is Clara Lyons Devon. I am the board chair of the Southern New Jersey chapter of the National Association of Real Estate Brokers. I am also the director of the Victorious Business Professional Ministry of Victory in Christ Christian Center. And I'm really excited because we are collaborating this evening to bring you this student loan workshop. But I want to introduce some really, really important people before we move on. I'd like to introduce Avery Ruff, who is the president of the Southern New Jersey chapter of NARAB. Hey, Avery.
Hey, Clara, how you doing?
Oh, just fabulous. Thank you. Thank you. Just appreciate everything that you do and that we're able to bring this program tonight to our listeners. And we also have Ms. Tammy Trotter, who is the vice president of SJ NARAB, who is handling our technical things tonight. So there she is. Hey, Tammy.
Hello, everyone.
Mm-hmm. And if you could, Tammy, just take a moment and talk about the school backpack giveaway shortly, please.
Oh, sure. On August the 26th, between 1:30 and 6:30, we will be giving away backpacks. But in order to get your backpack, we are asking that you or one of your children, child, niece, nephew, whoever gets vaccinated. We are partnering with the CVS on Route 130, and we have a goal of 200 backpacks with school supplies to give away. We welcome any donation, anyone that also wants to partner with us. We partner with Imani Realty, the New Jersey African American Chamber of Commerce, Creative Financing, and also, well, CVS. That's all of our partners right now that have come and that are participating with us, but there will be 200 backpacks is our goal to give out along with the vaccine. So there will be a voucher for anyone that gets their vaccine on the 26th at the CVS on Route 130 in Willingboro. And the vaccinations can be done between 9 o'clock and 6 o'clock on the 26th.
Awesome, awesome. So as you know, we have a heart for students, whether they be in elementary school, high school, college. We want everyone to be safe. And so this is our push to have people be able to get vaccinated. The vaccination is free. And also, if you do that, you'll also get the backpack. So please share that information. We'll put up the flyer a little bit later. So I really want to thank Victorious Business Professionals and also SJ NARAB for allowing me to bring this topic this evening about student loans. And I think it was in 2020, about 42.9 million Americans owed a collective 1.7 trillion in outstanding student loans. So it's a crisis that touches families across the nation, particularly in communities of color. Some lawmakers have advocated for forgiving student loan debt to help those struggling to make ends meet. But critics would argue that there's a cost to forgiveness and taxpayers will pay for it. So speaking frankly, CSBN did a episode that examines the rising cost of college education and the growing demands to cancel student loan debt. I have that out on the Facebook page, and we'll send it to all the people who are registered this evening. So tonight we have Mr. Gardine Wilson, who is a financial professional with Prudential Advisors. Mr. Wilson is passionate about providing his clients with tools and education that they need to navigate life's financial challenges. He has more than 25 years in the financial services industry, including 5 at Prudential. Mr. Wilson recognizes the more knowledge his clients have, the more empowered and confident they feel about achieving their goals. And we've had some really in-depth conversations about the importance of financial literacy and also about the importance of student loan and how to pay off your student loan debt. There's so much information that he has made available and that he's going to go over tonight. So get a pen, get a pencil, get ready. We're going to, because there's a lot of information to cover, we're going to hold questions to the end, but please put your questions in the chat as they come up, because some of it he may be covering, but put your questions in the chat, but we're going to definitely do a Q&A at the end. So without further ado,
Clara, I'm sorry, those that are on Facebook, put their comments in the chat as well. We have Facebook participants.
Oh, awesome, awesome, awesome. So without further ado, I'm going to bring in Mr. Wilson, and we'll get started. Mr. Wilson?
Clara, thank you. And thank you, NARAP, for giving me the opportunity to speak today about a very, very, very important issue, a topic that, especially in communities of color, actually has been the hope for a better tomorrow. And it's actually in a number of ways become a nightmare financially. And so addressing this issue and actually talking about this issue, I always like to go into the history and how did we get here? In the late 50s, the Russians actually beat us to the moon with Sputnik. And when that happened, the government created what's called the National Defense Fund. And it, at that moment in 1958, said, we're going to give money for our citizens to go to school so that we're in a position to compete, because by Russia beating us to the moon, it was actually something that threatened our ability to compete on a worldwide basis. And so that was the beginning of student loans and the government's ability to actually give student loans for American citizens. And it was around education and us being in a position to actually compete. In that, when we look at today, as Clara was mentioning, there's over $1.7 trillion. There's more student loan debt that actually exists than auto loans, than home loans, and credit card loans. Student loans by far is one of the things that actually is really, really putting a burden on a lot of households. Next slide, please. When you look at it, 11% of the student loans right now are over 90 days delinquent. And the average payment is around $300 per month. Now, in March of last year, there was a moratorium that was actually put that stopped student loans interest from accruing. And I want to get into that in terms of the government loans that this actually was affecting. There's a lot of confusion where people have private loans and think that that's actually part of what's actually going on, or they have state loans that they think are under moratoriums. But this is actually for federal student loans, which makes up 90% of all the student loans that are actually out there. And so with that, again, here just recently, we actually know that the moratorium and the interest that's accruing on these student loans has actually been pushed back now to January 31st of 2022. So that's giving a little bit more time for this to actually, for people to actually really get a handle on the student loans. Part of what we're actually going to be doing today, and I will welcome your questions, is student loans. To me, when I really began jumping into this, is one of those things we don't talk about at the grocery stores. We don't talk about in the churches. We actually seldom even talk about when we actually starting to date somebody. We don't say, hey, you know, what's your student loan situation look like? A lot of that is what I call way back in the closet in a file somewhere that we actually say, we just hope the boogeyman gonna come get it and it goes away. And unfortunately, them student loans will actually follow you to the grave as things actually sit today. Next slide, please. So when we think about student loans and a lot of what's actually going on in terms of Biden's exploring the whole thing about cancellation, there's something out there right now that's saying people should actually be able to have bankruptcy, get rid of student loans. The bill has recently been introduced. And when you look at the complexity around why is this such a huge issue in the African-American community? And when we look at student loans, we have to look at student loans and say, this is a return on investment. When we're planning and preparing to go to school, you actually should make enough money in the first year of your employment that actually exceeds your total amount of student loans. Now, let me actually be clear. So if you actually have $90,000 in student loans, you should actually be making at least $100,000 in your first year. 10% of which over a 10-year period is meant to actually pay those loans off. So when we look at the issue here where it says lower balances, you would think that it would be more easily paid off. It's a problem for young people. This is not true. These are both myths about student loans. Right now, people that are doctors, that are lawyers, that are engineers, that are tech people, those people actually are paying about 60% of all the federal student loans. And the reason why is because they're making higher salaries, which gives them the ability to end up paying more towards the student loans because they've actually budgeted that from the time that they actually come out. A really startling statistic is that for African Americans, 20 years after graduating, 95% of African Americans still owe 95% of the student loan balances 20 years after they graduated. One of the reasons being is that the interest rate typically on student loans is much higher. And with that, if you've actually come out and you're not making the salary that you thought you would be making, and you're actually trying to make ends meet in order to raise a family and these type of things, student loans actually end up getting pushed way back, but the interest is actually accruing, and that interest over time actually causes those student loans to double. And so when we look at the whole issue in Congress right now about why is it that we can't just do a blanket $50,000 across the board, the majority of people that are actually going to benefit are the people that actually are, having the higher balances. And so this is why Cordona, the Department of Education Secretary, has been tasked with trying to find out if Biden actually has the power to forgive these student loans and or if that's a feasible solution. When he was running in the campaign, he said that, we can look at canceling $10,000 worth of debt. Elizabeth Warren and some of the people out of Massachusetts and some of your more progressive people are saying we want 50,000. And so that debate is actually still something that is up in the air. And so with that, it's not so much the larger amounts that are not being paid, it's actually not planning properly when we go into college that actually has these balances extended way beyond where they should be. Next slide, please. And so when you look at how student loan debt is actually impacting, especially us in the African-American community, student loan debt is actually delaying retirement for 37% of individuals. 61% of millennials are actually delaying buying a home. And there's some legislation that just passed about a month ago that actually is good news for people looking at getting FHA. I'll come back to that a little bit later. Another issue is 25% of individuals are actually, saying that they're going to put off getting married And this really is actually putting a damper on people who are actually trying to get into long-term relationships, because when you're looking at taking on somebody's debt that's got $150,000, $200,000 in student debt, and you may be in a position where you don't have any debt, you may like the person, but am I really trying to jump into a situation that actually gets me that much in debt day one? Next slide, please. So the main thing that in every seminar that I do like this, I actually want every single individual that's actually connected to what we're doing right now is to understand what type of loan that you have. And that is very, very important, because if you understand what type of loan you have, and I've actually had, clients and people that have actually contacted me after these seminars to say, go back to your institution and actually, trust and believe they typically still have that your billing statement or your itemized statement of what you actually owed when you was at that college. And so in that, you also can find out exactly what amount of student loans that you have, whether consolidated, what actually has happened, understanding what your repayment options are, and then actually put a plan together around what your payoff strategy is. Unfortunately, the loan servicers who actually have been servicing the student loans, there's been egregious cases where they have not given individuals who have student loans the education around what your options are. Some of these call centers have actually, been in the contest to say, how quickly can we get someone off the phone that's actually calling about a student loan, and so they'll give some quick information, and you've got your life on the line. You're actually trying to make a conscious decision on how you're going to be paying off these student loans, and that information has just not been readily available for most people. But we'll talk about the repayment options here shortly. And then definitely the payoff strategy is always key. Next slide, please. So when you look at the federal loans, 90% of the loans are federal loans. Unfortunately, there was a period in the 80s and 90s where they allowed a lot of private lenders to actually come in and actually get involved with what was happening with these student loans. And it really blew up this entire situation around student loans, people getting in debt and the whole nine. But when Obama actually came in, they ended up buying back a lot of those federal loans. And again, right now, the federal government actually has 90% of the student loans that are actually out there. So these federal loans are typically funded by the government. They actually have lower interest rates than the private loans. Private loans always are actually higher. There's a subsidized interest. And going back to what I was saying, with this moratorium, because the interest has actually been on hold, there are some very, very good strategies that can actually be put around how, if you don't qualify for an income-based repayment plan, how to actually address your student loan situation. Federal loans typically have the flexible repayment options, and then there are forgiveness programs associated with the federal loans. About 8% of the loans that are out there are actually private loans, and these loans are actually with the banks, credit unions, and some of the state agencies. They have higher interest rates, and unfortunately, the repayment options depend upon the lender. This is similar to you having a car loan, so you don't have a whole lot of flexibility in saying, I just don't want to pay my car loan. Can you actually put that on hold for a year or so? The banks ain't gonna say, yeah, we'll come and repossess that car the next week if you don't feel like paying that note. So private loans actually do not have as much flexibility as you would with the federal loans, and that's where a lot of the attention is actually being right now on the federal loans. Next slide, please. And so this is a very key slide when you look at the federal loans. So in the first section, when you look at the directly subsidized and unsubsidized, in an undergrad, the annual award is typically your freshman year, $5,500. It's $6,000 your sophomore year, your junior year, $65,000. and then your senior year, $7,500, 4 years, okay? What gets a lot of people in trouble is that after the 4 years, that's when you actually start to get into higher interest loans, and actually, you actually end up, in some cases, having to go get those on a private basis. And so when you look at the interest rate, look at this column with the interest rate. So in undergrad, you can actually get these federal loans at 2.75%. But look at what happens once you actually get into going to a graduate program, and it's 4.331%. The most dangerous thing that's actually happening, that's trending right now, is parents. And at the direct plus down below, you actually have what's called the Parent Plus loans. These are for graduate or for graduate programs. The interest rate is higher. And when you look at your repayment options, there's only one income-based repayment option that you actually have associated with these Parent Plus loans. So right now, you've actually got over 4 million parents that actually have these Parent Plus loans, and which actually are totaling over $100 billion in debt. And the issue too is that with student loans, they can actually take 15% of your Social Security. So that in and of itself, when you look at the higher interest rate, when you look at the fact that, my child is almost through, I want to make sure that I'm trying to help with the, getting them, through. The parent typically is on the hook and not the child. Next slide, please. And so when we look at the repayment options, these are standard repayment plan. Next slide, please. The standard repayment plan is basically how all of this stuff was initially set up. 10 years, you're paying a minimum of $50 a month. The issue, and I'm actually going to tie this back into the real estate side. You actually, from the FHA loans, when you were applying for a home, if you had a $50,000 debt with student loans, they would actually take 1% of that, and they would actually apply that into your monthly payment. So that means if you have $50,000 and you was applying for a house, that means that they're going to automatically attach $500 as a payment that you should be making towards the student loan, which actually decreased your debt to income ratio. What's happened at about 3 weeks ago, the bill was actually passed that actually said now FHA loans, you actually are taking the income or the payment that the person is actually making towards the student loan. And as we get down into the income-driven, income-based repayment plan, what it's going to do is give people an opportunity to afford more home. And I'll go through that in a minute. But the standard repayment plan, this is initially, you actually are in whatever debt you actually have coming out of college, you should actually be able to pay that off in 10 years. Of course, this is the fastest amount of time. You have, least amount of interest because you're paying it off sooner. And this was how things were initially set up. And so what happened was people actually were not being able to pay these loans off in 10 years. And let's go to the next one. So what was introduced then was a graduated repayment plan, which actually says that every 2 years, you actually have to recertify in order for your payment to actually be where it should be. And you're expecting to actually make more money as you go, but you'll start out with a lower payment. And then over the 10-year period, you actually, every 2 years, have an escalation in how much you're actually able to pay. Here again, 10 years, return on investment. You actually, when you come out, you should actually be able to pay the student loan off in 10 years. Next, please. So then what happened is that as more people actually were going to grad school and getting MBAs and PhDs and whatnot, they said, okay, listen, these people have accumulated quite a bit. And so they actually created this extended repayment plan, which actually is a fixed amount or a graduated amount. So you can actually say, okay, I actually want to pay this amount of a year, or what I'm willing to do is I'll actually, recertify every couple of years and pay this off, but you were getting up to 25 years to actually pay this off as far as your student loan is concerned. And this typically is someone that actually has over $30,000 of outstanding student loans in order to get these paid off. So with that, of course, lower payments, and you're going to pay more over time under the standard repayment plan as opposed to this here. Okay, next, please. And so this is one of the most controversial situations because, of course, with every legislation that actually came in, they said, okay, how do we fix the student loan issue? Keep in mind, this thing started back in 1958. How do we fix the student loan issue? People are actually more in debt. People can't spend money in the economy. People can't buy houses. And going back to what I was saying, you look at African Americans, especially in our community. The government actually said it was a great thing for us to go to school. Our parents actually said, listen, you know, my son, my daughter actually went, they off to school, they get the education, they go on to get that great job in the sky. My parents actually moved up to the Midwest from Mississippi. And so education was very much something that they, you know, wanted us to do for us to actually have a better life. And that's what college and education was actually meant to do. So they actually introduced, after these plans were introduced, they said, okay, well, listen, people are having a hard time. Let's actually create an income-driven repayment plan. And so what this was actually done was this was designed to actually say, listen, the person actually may not be in their career, but they still got these student loans. And the issue that actually really, really created a juggernaut with these student loans was this. You had in the early stages, you actually had doctors and whatnot that would actually rack up all of this debt. And then what they would do right after they graduated was they would file bankruptcy before going into a lucrative job. Now, a lot of that is more of politics around locking folks in and not being able to, you know, get themselves clear in order to actually address the student loan issue. So the income-driven repayment plan actually came into place. And they said, okay, we're gonna actually put this in motion and make it a percentage of what they're actually making. And in 20 to 25 years, they should actually be able to pay off these loans. In that, the whole idea was to say that if they entered into this, that they're going to make this payment, and after the 20 to 25 years, these loans are going to be forgiven. Now, since 1995, when these were originally introduced, there have only been 32 loans that have actually been forgiven out of 43 million. And so let's go to the next slide, please. And so these are the four repayment plans that you actually have available, pay as you earn. Then they came back and revised it. And then they did this income-based repayment plan. And then for the Parent Plus loans, they actually, the only way that Parent Pluses can be involved is the income contingent repayment plan. This gets real murky. A lot of people actually ended up getting, you know, lost in this stuff. It was really complicated. And the other side of the coin that actually made this even more so is the fact that you can't have a forbearance. You can't actually have a deferment. You cannot miss recertification. And so if you actually did any of those things, the clock starts back over on these income-driven repayment plans. In the last administration, a number of people that actually had went through and had did, you know, the cross the T's, dotted I's, they were hung up in the administration approving and actually granting the forgiveness to millions of people that had actually entered into these plans. So right now, of course, that's a whole nother thing that Biden has to actually get it, their administration has to get a handle on. And so we'll talk about that a little bit more. Next, please. And so to just explain how this actually goes, and this is without getting really, really technical. So say the income-based repayment plan actually works best if you're making under $40,000 a year and you plan on making under $40,000 a year for quite some time. Let me just say that. And so when you look at this example, it's saying you make $40,000, poverty level is $11,000 per year in income. And so what happens is the calculation is saying, okay, we'll take 150% times the poverty level. That's subtracted from your adjusted gross income. And then you actually are taking that number, which in this particular case is 2,200, is divided by 12. And that's the amount that you'll actually have to pay every month for the 25 years in an income-based repayment plan, okay? And so keep in mind, again, you know, you gotta be on time, you can't have deferments, you can't have forbearance. You wanna make sure that you certifying. And during this period of time, the whole certification process has been halted. Everything that's actually been going on as far as the interest is concerned has actually been halted. And people that actually were in these income-based repayment plans are getting credit every month for payments, even though they don't have to pay since March of 2020. And so when we actually look at some people that are already in the plan, people that are considering going to the plan, you know, of course, there's strategies around how do you address your student loan issue. Next, please. And so when you look at, again, the if an individual consolidates the loan, the issue is that if you've actually got 5 different individual loans and you did a consolidation, the problem there is that you actually end up now actually opening up yourself to pay off these loans in 30 years. And you actually could also lose some of the options that you have in doing a snowball effect and addressing each loans individually. So it's always good to actually make sure that you pull everything together first. Next slide, please. And so again, going into the whole forgiveness thing, this also has been clogged up in the last administration with the education department, because the public service loan forgiveness program is for individuals who have been working for nonprofits that actually are in a position where they're helping doing something in the community. And for that, they actually have the option to actually have their loans forgiven over a period of time. Next slide, please. And so again, for nonprofits, working in nonprofits, you're making 120 payments over a 10-year period. You're actually already in the income-driven repayment plan over the 10 years. And then at that point, your loan should actually be forgiven. Again, only 1% of these have actually been processed for everyone that's actually participated. And I've got clients right now who've actually done this and actually still haven't received total approval. Next, please. The teacher loan forgiveness program, of course, is actually associated with teachers that are working full-time, 5 consecutive years in a low-income elementary or secondary school. There's forgiveness of up to $17,500, and it's subsidized. And again, in this particular case, it's not treated as taxable income. Now, one of the other things that happened when they approved the last COVID relief for everyone around the time when they gave out the $1,400, one of the things that Biden and them were able to put in that package that is very, very key is that any student loans that are forgiven, you're not subject to actually have to pay taxes on that income. So where you actually have been in the past, if someone actually forgave you of a debt, what they would do is send you a 1099-C, and what you would have to do is report that as income. So you can only imagine if someone was actually participating in this program and they were actually forgiven 80 some odd $1,000 student loans, and then they actually end up getting a 1099-C and said, now you got to report this $80,000 as income, that's going to be really, really lucrative for the IRS. And so in that particular case, that's one of the other drawbacks to this thing. And so what happened again in that last bill is that now all student loans that are forgiven are totally forgiven, and that is a tax-free benefit. The next, please. For individuals that are working for the government also has its own student forgiveness program, $10,000 annually and for $6,000 a lifetime. And most of these federal agencies have forms that you fill out, and then they actually are submitted. And with that, there's certain time periods where your loans would actually be forgiven. Next, please. And so for individuals that actually are returning to school or unemployment or unemployed or on disability, deferment is an option. But again, let's go back and actually, when you look at income-based repayment and you actually say, okay, well, I'm going back to school, so I want to do a deferment. Now you actually start the income-based repayment clock all over again. If you're actually unemployed or if you actually have disability, you can actually, ask for deferment. That'll actually give you up to 3 years where you can just, not pay, but they'll put the interest on the backside of the loan. And interest in and of itself is one of the most, devastating components of student loans. Forbearance in and of itself really gives you an opportunity, 12 months. And, a lot of your servicers will actually automatically give you a forbearance. But again, they put the interest on the back of the loan. Next slide, please. And so when we actually look at how are we attacking the student loan situation, we actually definitely want to actually get organized, which actually means find out who that loan servicer is, find out what your principal balances are, the interest rate being high or low, monthly payment, and then your private loans, you definitely want to pay off first. Now, let me actually speak to this for a minute. For individuals who know that you will not qualify for an income-based repayment plan, while there is this moratorium that's actually in place, any monies that you're actually making towards your student loan are going directly towards the principal. And so one of the things that has not been talked about, people actually saying, look, I'm just glad that I ain't got to pay, blah, 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 but if you actually know that those loans are actually going to come due, when the clock starts back up again in January, you could actually be able to knock the hole in the principal. And then when it starts back up in January with the interest again, that actually puts you in a much better position. For individuals who actually are in the income-based repayment plan and you know that you're going to actually be riding out the income-based repayment plan for your loan to be forgiven, the money that you would have allocated towards paying your student loan, or that amount that you would have allocated towards making an income-based repayment, that money needs to be put up. You need to save that money and actually make sure that you're actually putting it to wise use. And so, we actually have, and I'll actually make this available to everyone that's actually participating, with Prudential, we actually have a partnership for people that, are, connected or that we speak to actually speak to a student loan counselor, and they will walk you through uploading everything with the FAFSA and actually making sure that you have the best strategy in addressing your individual student loan situation. Next slide, please. And so this is actually just giving you an example of, how, if you have separate student loans or just how you pay off, always address the one with the highest interest rate. And the avalanche method is connected to that. And then when you look at a snowballer method, it's actually talking about paying off the lowest balances first, and you work your way up to actually knock out the bigger amounts. Next, please. And so, yeah, again, going back to what I was saying earlier, as far as, paying extra, right now, again, if you know that money is you want to get that loan paid off as quickly as possible, right now, all of that is actually going towards your principal. And you and I both know that money that actually goes towards principal is actually much better in terms of knocking out debt, as opposed to interest that's actually going to creep back in January of next year. Do your research. One of the things that I'm actually going to also do with Clara and the group here is I'm going to share some information and keep everyone here in the loop of what's actually going on. Next slide, please. Right now, with the interest rate being where they are, the banks are practically giving away money. And so when you look at these private loans, some of these private loans on average right now are between 6 and 8%. And if you're in a position where there's equity in your home, or where you've actually got good credit, I mean, I know some of my clients are actually getting 2.5% interest in some HELOCs and some of the other things. So when you look at reducing it, that's another strategy that would be really, really good between now and January, if you actually are able to go in and refinance the student loans and actually get those actually on a lower interest rate, so that you can actually attack those a lot quicker. Next. One of the other things too is, in doing, and knowing the whole taxation side, I'm amazed at how many people don't take advantage of the student loan interest deduction on your taxes. In this, it's actually an adjustment to the income. You don't even have to itemize in order to take advantage of this deduction. And your accountant should actually, if they haven't already shared this information with you, this is a section to point out where you can show them how they should be making sure you get the most of your money. Next slide, please. So, and one of the other sides too is with life insurance. Life insurance is actually talked about in our community. In fact, I'm in a national conference right now, and just showing the difference between how life insurance is actually viewed. Life insurance in and of itself is actually an investment. And unfortunately, in our community, we're talked about with life insurance as we need just enough to put us in the ground. One of the things on my side that I'm actually doing is making sure that when we're in training, CFP school, Howard University, and the whole nine, one of the first things they say is when you have a child, that is when you need to start planning for college. And so in that, life insurance, especially on children, actually, and of course it's for life insurance, but it can actually become their own bank inside of a bank for people that actually understand how life insurance is designed to work. When I was actually in school and in the athletic dorm, and we was trying to scramble up $5 to actually get a pizza, we would look across the hallway, and they was some of the other guys were actually living very well, living off campus. They was actually having toga parties and some all this other stuff going on. And we was wondering, where did all this money come from? And in that, a lot of it was because their parents actually invested in them young. And so by the time they got ready to go to college, when you look at right now, almost 90% of us are actually using federal loans as African Americans to go to college, compared to 50% of Caucasians that are actually going to school. And so when you look at how are we actually preparing, a lot of that is actually done in the early stages. Next slide, please. And so these are some of the resources for looking at help around these student loans. The federal student aid actually has really good information. Again, like I was saying, I'm going to provide some additional information to Clara and the group to actually share. But these are some good places. And since this, there's also been a number of advocacy groups around addressing the whole student loan issue. Next slide, please. Okay, and one more slide, please. And so in closing, I'm gonna get to the questions, but in closing, I want to actually tell you some of the things that are actually going on right now as we speak. One of the legislation that Durbin is actually introducing is around people being able to file bankruptcy if they've attempted to actually pay off these loans for more than 10 years. And so if there's more than 10 years of college debt that you actually have, they've introduced a bill that is actually saying, listen, bankruptcy is meant to give people an opportunity to reset and to restart. And unfortunately, that has not been offered where you have over 45 million people that are actually struggling under the weight of student loan debt. And so in that, that's one of the bills that actually is a bipartisan bill that's actually being introduced. Some of the other things that have actually happened since we actually did the initial seminar back in April is that they've actually addressed individuals who are 100% disabled. Those applications for people that are disabled are going through, and with that disability, you can actually get student loan debt removed. The other thing that's actually happened as well, so that actually affected about 170,000 people. So the other side too is that there's right now about 400,000 individuals who actually went and actually to for-profit schools for IT degrees and whatnot. And those institutions were actually claiming they were accredited in XYZ and they actually weren't. And so those complaints have actually reached the top of the White House, and those student loans are also being looked at to actually be forgiven. One of the other things that I thought was very, very powerful, and I was very, very proud of some of the HBCUs that have actually stepped up and that have actually forgiven student debt that actually has happened over the past couple of years. South Carolina State University, look, almost $3 million that they actually kicked in to actually just forgive hundreds and hundreds of students' debt that was actually on the book. And what they did was they actually used the extra money from the CARES Act that was designated for these institutions that was left over, and they actually have used that to forgive balances that students actually had on the books. So for anybody that's actually listening that may have actually went to an HBCU, because I know that it's really picked up steam over the past 2 to 3 weeks. And so if your institution hasn't already done it, definitely, ask the question, because I'm sure that it may be coming down the road for them to forgive the student debt. And going back again to what I was saying with the FHA, of course, right now, when you look at the fact that people are actually able to use the amount they're paying against the student loan as the number, as opposed to the 1%, it's actually really giving people 40 to 60% more purchasing power for getting into homes. And so that is actually something that has in fact been passed. And it's, again, if you're getting an FHA loan, first time buyers and whatnot. So it's actually loosening up some things there, which is actually good. Again, we still actually are waiting on the situation around cancellation. As you know, everybody was looking at the 1st of October, but now we've actually been given a reprieve and a little bit more time to actually get some things together. And I'm going to stop right there and just open it up for questions and comments, and seeing how we can actually get out of this hole with all this money.
That was a lot of information, and I just want to thank you, because I think when we talked before, I was sharing with you, praise God, all of my student loan debt is paid off now. But at the time that I was going through it, I didn't know that there were options available to me. Number one, for different types of ways to repay it, and also different solutions, or people that would counsel me for the best way to strategize financially to package it to be able to pay it. And one of our collaborators with NARAB has a bill out as well that will allow people to put money away for home purchase, similarly like we would put it away for going to school. As you talked about, there are other families who strategize, and when they're looking at planning for their children to go to school, they set up policies or annuities or different types of instruments so that by the time that child gets college ready, that money is available to them. So that type of what the new legislation would do would also do that for home ownership as well. So we just need to be educated and to have the information. So I appreciate you bringing that, the information that you've given us today. We have a few questions in the chat. Avery and Tam, I'm going to need your help on this. So Zakia had a question initially about the income level. Is it household income or individual income that is being considered? And I forget which slide that was about.
Yeah, great question. So again, this goes back to the do I really want to get married to you question. Because if you are in an income-based repayment plan and you get married, they are going to take both of your incomes into account for what you have in your new income-based repayment. And so in that, again, people will actually, if you get married and then you get married filing separately, but then even in married filing separately, you lose a lot of tax advantages by going married filing separately. And so it is household income that is actually determined when you're actually looking at an income-based repayment plan.
Awesome, thank you. Tammy, I'm going to go to you. Is there a question from Facebook? And we'll go back and forth.
Yes, I have a question from Patricia King. She said, I work for a federal agency that provides a public service. I would like to know how I can find out if any agency qualifies for public service loan forgiveness programs.
Absolutely. If my email is here, if they can shoot me an email, I'll actually make sure that they actually have the link and access to the information that they need in order to get that submitted for the process to get started.
Awesome. The next question is from Abrina Hilson. She says she's going to graduate school to be a school counselor. Will she be able to qualify under the teacher loan forgiveness program?
Yes, normally the teacher forgiveness program is connected to going to a Title IX school, a low income school that you actually would be teaching in. And so depending upon where she's actually planning on teaching, again, that process is actually submitted, and she would be eligible for, again, that $17,500 forgiveness. And I think that's actually after 5 years. 5 years, yes, being in 5 years.
Gotcha. Pam walked away. Let's see. The next one is from, do you have another one from Facebook?
No, not one from Facebook. That one was on the chat. I don't see any from Facebook right now.
Okay. So then the next one is from Mia Frazier. She says, our son will be entering his sophomore year. When should we start repaying his loan? What is the best repayment option?
Yes, individually is a question that I have there is he on the loan or is it a Parent Plus loan? With that, again, while you're in school with a federal loan, the interest is being held. So there's no interest that's accruing while you're actually in school. So because he's a sophomore, I would say that definitely it would be wise to have a plan, especially if the loans are actually with him, to actually have those, that in place and ready to go by the time he gets out. One of the other things that I do want to make the audience aware of, and this is one of the huge boogeyman's that's actually in every single room and every single household, and that is purchasing power. So what's happened with a lot of the printing that's actually happened with money and stimulus and, you know, buying of the bonds and whatnot, is that there's going to be a spike in inflation, which is actually going to take the cost of a lot of things up out the ceiling. When you actually have, again, these student loans that actually are really not only debilitating your purchasing power, but also the issue associated with that is that we have got to be prepared for what's about to happen. They just extended the moratorium on rent. They just extended this moratorium around people that actually cannot pay their mortgages. They actually extended this thing around student loans. And they're actually saying, look, this is the last time, the last time, the last time. But when they actually end up pulling the candy jar off the table, I'm saying everyone needs to be prepared and be wise about not just your spending, but how we're actually managing debt. And when these student loans again come back forward, you know, we want to make sure that we have some incredible strategies, not just for them, but all the way around.
So for with Mia, then you're saying that if the loan is in her son's name, they can start repaying it while he's still in school?
Yes.
Or should they wait until he gets out of school?
If they're paying it while he's in school, of course they're paying the principal. The thing that actually is, again, most damaging about student loans is the interest and time. Let me go back and say, 95% of African Americans who graduated 20 years ago still actually have that debt that they had when they came out of college. Okay, and so when you look at the reason why that is because of the interest, especially when you actually look at, you know, people that were in school when there was 11 to 13% interest rates that have actually been in place, and they never actually went back to look at how can I refinance this loan or what can I actually do, and they had it consolidated, and the loan servicers didn't tell you the information, and now you've actually got $100,000, $200,000 of student loan debt. You know, I actually just spoke with a couple last week. Both of them actually have over 330,000 each in student loans, and they are actually in their mid-30s. And so when you look at how this can really inhibit us from moving forward financially, that's the most dangerous part about these student loans, especially when we don't have a strategy.
Indeed, indeed. And then the best repayment option in that scenario would be what? Would it be to do the parent repayment, to do the, which plan would be best for them?
Again, it would actually, if there's a parent plus loan, there's only one repayment plan that they had if they're doing an income-based repayment plan. So again, it actually depends upon what they're actually making as far as income. And that's why I was saying, if, you know, Mia wants to email me, I can directly connect them to our partner at the Vault, which has a student loan counselor for free that will actually talk to them and walk them through the process.
Thank you. The next question is from Rebecca Boatward, and she was told that you can only claim, it says this, for 10 years. After that, you don't get the credit. I'm not quite sure what she's speaking about. Do you know?
Okay, it's 10 years to get the credit.
Yeah, it says you can only claim this for 10 years. Rebecca, what's the this you're speaking about? Can you put that in the chat? And after the 10 years, you don't get the credit. Not sure.
Clara,
Loan collector.
Clara, I think she's referring to the student loan deduction on the taxes.
The student loan deduction if you're paying the interest?
I believe so. And that's when the question came up when we were discussing, when you were discussing that.
Yep, she said yes.
Mm-hmm. So in the year that you've actually paid interest on a student loan, you're able to deduct the interest.
So in other words, it doesn't end after 10 years. So if you still have interest, you know, for 20 years on a student loan, you can still deduct that?
Yeah, because that's the interest that you're paying in the year that, yeah, you're paying for the student loan. Yes.
Gotcha. Okay.
I've not heard of a 10-year cutoff on student loan interest deductions.
Okay.
Mhm.
Okay, she says, thank you. Great, thanks.
Clara, did you ask Ms. Bronson's question? I attended Lincoln University. Are they participating in the forgiveness program?
Yeah, that would be a great question to actually call, especially now that everything's actually ramping up for school. Speaking of that, that's another thing that I actually do want to bring to the group's attention. I always say, especially with my clients, you know, of course, we want to start when they're actually born, but we say, okay, well, we need to really start getting aggressive when they get in 8th grade. 8th grade, we need to actually really start getting aggressive about this whole thing around college. 41% of individuals who have college degrees are not working in the degrees that they have college degrees in. 41%, which actually means that if 41% of individuals are actually not in the field, that means that they actually invested in something and accrued debt on something that is not even connected to what they're doing. And so in that 8th grade, one of the things that one of the counselors at school actually was bringing to my attention is that there's a number of schools that actually will allow you to write an essay as to why you want to go to that institution. And in that essay, there also is a level of financial aid from the school or a grant that actually can be connected to an essay. And every year, a lot of these schools don't get the essays even sent in to actually award the grants. And so I was meeting with a client last week, and her daughter's in 8th grade, and she's been mentioning going to her mom's alma mater. And I said, hey, you know, get some of the paraphernalia in her room and, you know, get her with the mascot and get the letters written and say, this was my dream school that I wanted to go to, and get that free money to actually get to college paid for. You know, it's always good to actually get started as early as you can to get ready for school, especially college and stay out of student debt.
Awesome. The next one is Daniela McLaughlin. She became disabled at the end of college. She's on SSI and SSD. My loans are in deferment. How do I get it forgiven? My son's going to college in 3 years.
Okay, and so again, all of that, right now, there's a number of those individuals who have disabilities that actually have had their student loans forgiven. Of course, there's the application process, but yeah, that was huge about 2.5 months ago, that they just forgave and are continuing to forgive a lot of individuals who have disabilities. So if she could actually shoot me an email, I'd like to get her again the information as well that she'll need in order to get that taken care of.
My mic back on. The next question is from Sharice Generette. Currently under the public loan forgiveness program as a school social worker, can she possibly do the teacher forgiveness program as well because she owes over $17,000?
Yes, I have actually seen where that's been done simultaneously. And so if she's actually already, again, in one forgiveness program, nothing's stopping her from, nothing stopping her at all from applying to actually go through the other process for forgiveness. And again, as I was saying, anyone that actually wants to speak to a student loan counselor, just shoot me an email. I'll actually send you the link to actually go through the portal to speak to a student loan counselor for free.
I'm gonna put your, I'm sorry about the screening. put your information back up.
His email is in the chat as well. Just in case, there it is. If his email is in the chat too.
Yeah. Is it on the slide? I don't see it here.
Yeah, and I also got it up under my name.
Mhm. Underneath his email address is underneath his face online, but his contact information is not there, Clara, on that one.
Sure.
I can put it in the chat. I'll put it in the chat.
Awesome. Awesome. And there are two other things. There was something you said when we had a conversation, Mr. Wilson, about employers also doing programs to assist with student loans. Can you talk a little bit about that?
Yes, yes. In fact, at a number of companies, Vault, again, is one of our partners. And as being an employee, there is an amount that you will actually, you pay, and a number of companies are actually participating in it, where you actually have a part come out, your employer will match similar to what they do with the 401k. And a company like the Vault, they actually, with your loan, will actually stop the interest and actually allow that student loan to actually be paid off. And so for individuals, especially coming out of college, you see a lot more of that happening, where these institutions are, these companies are actually engaging in student loan debt repayment. Target was one of the companies also. I don't know if anybody's actually seen that, but Target is actually now saying that they will actually make sure that if you come work for them, that your college education will be paid for. And so you're actually beginning to see a lot more involvement around how are we addressing, how are we attacking, and how are we actually handling this situation around the student debt. So yeah, so for that actually is an extra incentive, especially now that the company is actually having a difficult time even trying to find workers. So just look for more of that to be happening.
I have another question. Were you recommending filing for bankruptcy if you've been paying your student loan over 10 years? That's such an interesting question, because Mr. Wilson sent me a piece of new legislation that's going on right now about student loans and bankruptcy, but I'll let you speak to that.
Yeah, so Senator Durbin, they actually just have a bipartisan bill that has been introduced. And when you look at the whole concept around bankruptcy, and just think about this for a minute, just imagine, you get over 45 million people who are strapped with $1.7 trillion of debt. And bankruptcy, you cannot get rid of your student loan, okay? And when you think about that, may actually be the largest debt that you would actually have, where you would be trying to restructure. And so that, again, has actually, since the 70s, has actually been something that people cannot actually file to actually get student loans brought into their bankruptcy. And then all of the time, because it says specifically that in bankruptcy, if there's a financial hardship, that you should actually be able to put that in. And in the entire history of student loans being in place, there's only been 4 student loans that have actually been discharged in bankruptcy. And so when you look at why is this legislation, if it does actually, go through, it's got, again, bipartisanship. You see where they just passed the infrastructure bill today. Of course, as it gets into the House, they're going to be blending some things in about, the student loans and how do we address it? Because keep in mind, the whole thing around the stimulus was for us to actually start spending money back in the economy. And especially in the African-American community, we actually have really, really sparked this initiative around small business ownership. And when you actually look at getting an SBA loan, you can't actually get a federal loan if you owe federal money. And so when you actually began to look at how is it that we began loosening up money in our communities, how is it that we actually are able to spend more, support more, put this in a position where we're able to hire more people in our community and create these infrastructures that actually allow us to strive and survive, student loans is huge. And so it's actually being hit and attacked from different issues. Like I said, looking at how the HBCUs have stepped up, looking at, Biden's commitment around, looking at cancellation, looking at what's actually happening with them addressing the backlog of people who should have actually been forgiven in these income-based repayment plans, looking at what's actually happening around, the bankruptcy legislation that's being introduced. Now, the FHA piece has actually been passed. And so people actually have more that they actually are in a position to purchase. All of these things are actually happening, and we should be taking advantage of them, primarily because once inflation kicks in and they start to bump them interest rates back up going into 2022, things are really, really going to get tight in this economy. And so as we have this community that's on right now, it's about sharing the information and actually making sure that each household is a lot stronger financially as we move forward.
Indeed, indeed. Are there any other questions that I missed? See anything else in the chat? Did I miss anything? Did I miss anybody's question?
No, I don't see anything that you missed.
So, Mr. Wilson's information is in the chat, so definitely write that down, and then Tam's going to post it to our viewers who are viewing on Facebook as well. And also, if we had put something up about possibly having a one-on-one session, not a one-on-one session, but an in-person session at the end of the month on the 28th. So is there anybody in this group that, after hearing the information today, or do you just want to do a one-on-one? Oh, there's a poll, great. And it's in person on the, it would be Saturday, the 28th. If you do the poll, that would be great.
Virtual seems to be winning hands down.
Yeah, and it would just be an opportunity to ask more detailed questions about your specific situation, and we would bring in representatives either from the vault or from Prudential to work with you. So virtual is winning out, Mr. Wilson.
Sounds good. Yeah, and in the meantime, this is, like I said, an ongoing issue, and everybody's issue is separate and different. And so, for me, I love, again, the questions. I thank you for your questions. I do think that action is actually what's needed, and us actually moving strategically in a way that that actually benefits us individually as well as our households, so we can push wealth forward and not debt.
Indeed. Well, I just want to thank you for taking the time. I know you're on a different time zone. There's a lot of great information. And if you have any additional questions, definitely feel free to reach out to Mr. Wilson. He and his team are available and can, work with you on your specific situation regarding student loan debt, and also with financial planning, because it's a full package, as Mr. Wilson was saying. When you put it all together, it makes it easier, if you have the resources and the package together to kind of do that, because we want people to really go into the education process for it not to be a liability, but for it to be an asset moving forward. we shouldn't be debilitated by different types of debt. So I just want to thank everyone who attended this weekend. I'm going to ask for any closing remarks from Mr. Russ and Mr. Wilson. If you have any closing remarks, and then I'm going to turn it over to Avery and Tam, and then I'll do the final closing, and we'll be complete.
Hey, again, thank you to everyone that attended. And even if you've actually paid off your student loan, touch somebody that actually needs to get this information. And again, like I said, let's move from deficits to the positive cash flow. Thank you so much for the opportunity.
Thank you. Mr. Rock?
Fantastic. Mr. Wilson, thank you so much for this great information. I mean, I have two daughters that are just beginning the process. I have one going in college in September. So this definitely puts us on track of what it is that we need to be doing moving forward for us really to stay ahead of all this. And I appreciate you taking the time and giving this information to us. Also want to thank Clara, which is our board chair, and also Victorious Business Professionals for collaborating with South Jersey NARAB and for us to be able to bring this great information to our community. I mean, this is just a wealth. This is just a wealth. And then also thank Tammy for work she always does, which is around the clock. And as well, I just want to take a moment to thank all our Realtors members that are on, our Regional Vice President, Ms. Myronnie Smith, our other members, Raymond Byard, as well as Linda Green Davis. Those are members of our South Jersey chapter, as well as any other Realtors may be on the call. So once again, thank you. Thank you so much. Tammy, anything else?
No, I just wanted to remind everybody, we will be having, a back to school drive, a vaccine and backpack back to school drive in Willingboro on the 26th. And for all that will go and get their vaccinations done at the CVS there on Route 130 at 4362 Route 38 North in Willingboro between 10 a.m. and 6 p.m. on August the 26th. We will give each person a backpack. You'll receive a voucher, and we will give them out between 1:30 and 6:30 at Imani Realty at 300 Campbell Drive. It's actually right behind the CVS. And we're thankful for our partners that are so far on with us to help us bring this event to the community. We have CVS, of course, who are offering up the free vaccinations, Imani Realty, the African American Chamber of Commerce of New Jersey, Creative Financial Network, and also the Eastern Stars chapter number 3. I'm sorry. The Eastern Stars will also be one of our partners, the Harmona chapter 3. And we thank Latina Gaines for their participation with us with that. But if anyone needs any further information, you're welcome to contact us via our website, where you can also find our email there, which is South Jersey NAREB, NAREB.com.
Awesome. Thank you so much. And, I love it when I can bring both of my families together, my my real estate family and my church family. I just want to thank everyone from Victory in Christ Christian Center who jumped on tonight, friends and family. And also want to thank all of my NAREB family, South Jersey, North Jersey, all of Jersey, and also for everyone out of state who jumped on this evening as well. This is a topic that is so important in our community, and I'm really happy that Mr. Wilson was able to share the information. We did stream this live to Facebook, so if there's someone else that you want to share the information with, I'm going to share it to my page. And yes, Ms. King, I got you. Share the information to my page so that you can share it out to other people as well. and just want to thank you all for your time this evening, and love you all. We will be having the Victorious Business Professionals will be hosting a career resource fair in September. So if there are different careers that you wanted to maybe get some more information on, we'll have people in those careers kind of give some information, and you'll have an opportunity to speak to them directly about what it takes to get started in those careers. So just want to thank you all for attending this evening. Thank you, Mr. Wilson, for your presentation. If you have any additional questions, you can reach out to myself or anybody on the board. I see my assistant director, Mr. McGee, and Ms. McFarland are also on tonight. So you can reach out to either any of those people, to Mr. Ruff from SJ NARAB, to Ms. Trotter from SJ NARAB, with any questions for additional information on our upcoming events and activities. And with that, I am going to say good evening. Thank you. Love you all.